In this video, I'm going to bring on a guest that is heavily involved in real estate. He has been able to avoid significant taxes legally as a high-income earner. His name is Jim Barrett. If you could introduce yourself, Jim.
Danny, it's nice to be here. I own a company called Barrett Capital.
Let's just go with your first overall experience in real estate. What was your first deal, and how's your experience been in real estate?
Actually, my in-laws owned a rental property, so I actually helped sell that property. From there, it just kind of sparked my mind, and I ended up buying a couple other properties right after that, and pretty much full invested into real estate, and I love every aspect of it.
So what advantages have you been able to do as far as all deductions, and how has that affected your taxes as a whole?
With the W-2, if I make $200,000 a year, uh, it's reported to the IRS that I made $200,000 a year, right? If it's just an LLC, you can't deduct losses from your own personal income. Now, once it becomes a partnership, you can deduct those losses from your personal income. So what I've done with Barrett Capital is, I make profit from the income that the renter pays me. Now I have a mortgage to pay. I have expenses, whether that is repairs in the house. Also, in addition to, I purchased a truck that qualifies for the 179. That whole purchase price I can write off over the span of 5 years. You can take it in a lump sum in year one, but it's current day for 2024, you only get 60% of that. So instead, I chose to do it over 5 years. Now, that reduces my personal income.
And how is that different than the LLC as far as going through that process?
You can make an LLC of anything, right? So a partnership where all that means is you have at least one other person that is a part owner in that business. So I have my wife on that business, and therefore we are 50-50 owners. So therefore we can take advantage of some of the tax advantages for depreciating assets in order for it to come off on our taxes. The depreciation for the straight line of the actual home, that's where they allow you a max of so much per year, right? So I think my purchase price was $150,000. It's $150,000 divided by 27 and a half years, right? So when I bought the truck, that helps me also every year. It's like 13 grand that I get knocked off my net income. On the company in the past 3 years, I haven't paid any taxes because with the depreciations hasn't produced in the IRS's mind money. Section 121 says that if you live in that property for 2 years out of 5 years, you don't pay any capital gains. Now, you will pay capital gains if it's over $500,000 for married couples. In our case, it was about $120,000 after the realtor fees, and we were able to walk away with a $120,000 check in 2 years, tax-free, because of us living there for 2 out of the 5 years.
Now, are there any other ways that, say, someone isn't able to take advantage of a 1031 or the Section 121, that is, if you lived in the house 2 out of 5 years, you get to avoid capital gains? Say someone has to sell their home for a gain and they do have to pay taxes, or they're supposed to. What are all the ways that they could deduct that are possible legally to do so?
The biggest benefit here is with real estate, you have depreciation. At the end of the day, if I have 5 different properties and they all depreciate, because the IRS allows you to do that legally, even though my $100,000 investment is actually, I could sell 5 years from now, let's say for $200,000, that house is now older, right? Your brick is older. It is deteriorating. The inside, you might do renovations and make it look all fancy again. It's different when you have a company versus on my personal home, I'm just putting money into it. The biggest benefit is with the company that holds my rentals, it's a company, right? Companies are taxed differently. Companies have total different laws than what your personal income does. Now, the biggest benefit is my company is a partnership. Therefore, I can deduct those losses off my W 2 income. It's also different for filing married or filing single, right? I'm married, so my tax bracket is lower because me and my wife's salary can cover a little bit more of a range. But again, we should be in two tax brackets higher than where we actually net because of the companies we own and the expenses we have, which then in turn, lower our net income. Home renovations on your home, primary home, are for your personal, they're not to make money. Do they increase the value of your home? Yeah, they do. But you spent the money to do those renovations. When you talk investment property, when I fix up an investment property, those are losses. Those are legal losses to deduct off of my income because it is not my primary residence. Another one that I don't utilize, I really don't know a whole lot about, but I'll touch on it for a second, is real estate professional. Is if you are over 50% of your income is around real estate, you can qualify as a real estate professional. I'm not going to touch on the additional tax benefits there, but I do know there's a lot of tax benefits. But what real estate allows me to do is at the end of the day, I own that property, right? So going back to when my fiance bought that property from my neighbor, she put $4,000 down. But in the grand scheme of things, to buy a income producing asset for $4,000 in which then you can depreciate that asset, not only make money, but then reduce your overall income and taxes, it's fantastic. That alone was a huge strategy I used because when we were not married yet, I had my personal house. That was her personal house, her first time home buyer house. It really helped us because if we were married at the time, I would have had to put 25% down to buy that house. Instead, I put 3% down and we bought it for $4,000. Every finance investor that I know and talk to, their goal ultimately is how do I get a property with little to no money down, right? The more money you put down on a property, the less your ROI is. If I have to put $150,000 down to get me a $500,000 duplex or you name it, in my ROI calculation and my cap rates, that 150,000 down, I've already spent that. There's different strategies on, whether that's finding a seller that is willing to work with you. Typically, it's not as much in the single family aspect of it. It's once you get into the multifamily and the commercial spaces, sometimes they have seller financing, which is really great because seller financing takes the banks out of it altogether and you pay the seller direct. So you might be able to work out a deal where, staggered over a few years. At the end of the day, they get their money of what that purchase price was, but you can kind of leverage your money better to where you don't have to put as much down.
Any other resources or tips that you'd recommend?
I wouldn't know what I know today without guidance of a CPA. Do they cost money? They cost money. Do you need one? Absolutely not. But I would suggest that if you are trying to learn the tax laws and how tax loopholes can help you, find somebody that's an expert that can then take you under their wing and show you this is how you do it the right way, the legal way, and here's how I can save you money. And I'd be in a much higher tax bracket than what I'm in now. My tax bracket is very low because I have losses, because I have the company, I have expenses I got to pay for, which then in turn make my gross income come down and my net is significantly lower.
All right, Jim. Well, where can people follow you and any other things that you want pointed out?
I have LinkedIn. I have a website. Feel free to send me more questions. I'm not saying real estate is the end all be all. It is not a get rich quick. It is still slow, similar to stocks, but there's a different savings between taxes and then you have the asset that not only is going up in value, but at the end of the day, you have an asset that's physically there that you could sell.
I'd love to hear it. I appreciate all your input in the real estate industry, and thanks for hopping on.
Thanks for having me.